Want to filter out fake breakouts and only catch high probability trades? In this video, I'll show you how to combine a powerful trend forecasting tool with a breakout strategy that uses nothing but a breakout and indicator tools. And the best part, you'll learn a precise entry technique using candle closing, so you'll only be entering when the market confirms your direction. The name of this indicator is the log regression oscillator channel. This indicator plots a logarithmic regression midline, which represents the true direction of the market trend. Around that, it builds dynamic upper and lower bands, which act like adaptive support and resistance zones, and also tells trend direction. If the midline slopes upward, the trend is bullish, and we focus only on buying opportunities. If it slopes downward, the trend is bearish, and we're only interested in selling setups. And if it's flat, the market is likely in a range or lacks conviction, and that's a good time to stay out. This simple slope filter alone eliminates most of the noise and helps keep you aligned with the actual market flow. Now let's break down the full strategy. You'll be combining this indicator with a trendline breakout method, plus momentum confirmation using candle closing. First, check the direction of the oscillator. This defines your directional bias. Then draw a clean trend line along the candle body closes. It could be a descending trend line in a bullish setup or an ascending one in a bearish pullback. Once the breakout occurs, you don't enter immediately. Instead, wait for 2 candles to close in the direction of the breakout. These 2 candles act as your momentum confirmation. 1 candle can be a trap, but 2 full-bodied moves show conviction. Only take trades when the breakout direction matches the slope of the log regression channel midline. Let's walk through a bullish trade example. Suppose the midline is clearly sloping upward, signaling a confirmed uptrend in a bullish trend oscillator. You draw this trend line, then price breaks above that line, but instead of jumping in, you wait. The first green candle closes above the trend line. Then the second green candle closes strong as well. That's your signal. You enter at the close of that second candle. Place your stop loss just below the breakout candle or the recent swing low. Your target can be the upper regression band, or you can trail your stop if the trend continues strongly. Now let's reverse the setup and look at a bearish trade. The regression midline is sloping downward, so we're only interested in short trades. You draw an ascending trend line underneath the candle body. Then price breaks down through that trend line. Again, you wait and the first strong red candle closes below the line. Then a second bearish candle confirms the move. Entry is at the close of the second candle. Your stop loss goes above the second candles or the last significant swing high. Your target could be the previous lowest low, and if the momentum is strong, you can aim for the lower channel band. Now here's when to avoid trading this setup. If the regression midline is flat or nearly flat, that's a warning sign: no trend, no trade. If you see small candles with weak bodies or too many wicks, that means there's no real momentum. This strategy depends on clear direction and strong follow-through. Don't force trades in these environments. Let's recap everything in one flow. You're using the log regression oscillator channel to identify the dominant trend based on the slope of the regression midline. Then you're drawing clean trend lines on candle body closes during pullbacks or consolidations. You wait for a breakout and only enter once you get 2 consecutive full-bodied candles closing in the breakout direction. And most importantly, you only take the trade if the breakout matches the slope of the midline. That's what keeps you aligned with real trend momentum. It's a clean, structured method that removes emotions, reduces noise, and boosts your probability of success. If you liked the video, make sure to check other highly profitable strategies and indicators, and also subscribe to the channel for more videos like these.